is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Andrew, the big thesis or big story that a lot of people have talked about this year in crypto has been the Bitcoin ETFs, which have gathered over $23 billion in assets and kind of continue unabated. And I think from the outside looking in, if you didn't know much about crypto, you would say this is the defining story of 2024. But in fact, there's a lot that's happening behind the scenes. And I think that if you look beyond the ETFs, there's some bigger and more profound transformations that are happening. I would say that they fall, broadly speaking, into one of two different categories. Category one has been the rise of prediction markets, especially around the election. They've gone from sort of being part of the news to leading the news to basically becoming the news. There was some big stories in the FT and the Wall Street Journal over the past weekend about how prediction markets have been impacting the perception of the election. And then the other big story is stablecoins and what I would more broadly describe as real world assets. So stablecoins are sort of the first example of how tokens are being used as a container for other kinds of assets. They've grown to 170 billion. Every month they do, I think, $400 billion of payment and on-chain transactions, and they're kind of growing unabated. But as I've said on the show before, and we've discussed at length, tokens are just containers for value. They can be used to program basically anything of value. It can be money, but can also be stocks and bonds. It can be titles and deeds to property and other kinds of real world assets. And this is something that a lot of big Wall Street firms have started to pay more attention to. BlackRock recently launched BUIDL, which is basically like an on-chain money market fund for its high net worth clients. And we've seen a bunch of other really interesting initiatives as well. So this thesis, real world assets or RWAs, I think is something that's really picking up steam here, especially in the second half of 2024, and I believe is going to be one of the defining themes for the next year as we see crypto and TradFi begin to become more intertwined. One example of that, by the way, just from the past week, is the deal between Stripe and Bridge, which is basically like a technology provider for stablecoins, as we see some of the biggest payment companies in the world, MasterCard, Visa, and now Stripe kind of jumping into this area as well. So to help us make sense of this whole phenomenon and to talk a little bit about where we go from here, we do have a great guest. Chris Yin is the founder and CEO of Plume. Plume Network is a standardized solution for TradFi institutions to basically quickly bring any asset into the real world online and on-chain, allowing them to capitalize on things like collectibles, alternative assets, and obviously securities, financial instruments. Since launching in early 2024, Plume has already grown to be the largest RWA community with 150 plus projects and counting. Chris, by the way, is someone who's a serial entrepreneur. Plume itself is backed by some of the who's who in the crypto VC world, including Galaxy Digital, Injective, Portal Ventures, and Han Ventures. So he's really the right guy to tell us about this. And also, Chris just happens to have gotten off stage at the RWA Summit in New York. So not only can he provide some comments on what he's up to, but maybe give us a sense of the market as a whole. So first off, Chris, thank you and welcome to the show.
Of course, thanks for having me, and excited to get into it today.
Yeah, awesome. Okay, so maybe can you just tell us, like, what is the RWA thesis, and why are you dedicating your time to building in this space?
Totally. And look, there's a bunch of different stories that surround the RWAs. RWAs, like you said, stands for real world asset, right? And so the idea is very simple, right? You are taking something that is in the real world and putting it on chain in some form or fashion. And we can explain what that means in a second. A lot of people think it means just tokenizing, but there's many forms and factors to it. But look, what we're doing with RWAs, and what people are excited about, is very simple, right? We are taking a bunch of the sort of broken processes in TradFi and how things work today and sort of unifying it behind one network. Right. And the idea is by having this on an open and permissionless ecosystem, or even a permissioned one, you can then have a world in which you can have the global financial system in one place. Things move very quickly, right? It's a simple example. Moving money today from place A to place B takes a lot of time, is usually expensive, and depends on where you're trying to get it to. If you're in the US, fine. If you're trying to go to different countries or whatever, it can be quite painful, right? Even a wire today is $25 and you have to wait 2 or 3 days, right? So simple things like that, where you can then be able to move any quantum of money into any destination you want and have it settle and actually be confirmed like very quickly is kind of the big idea overall, right? And broadly speaking, RWAs are a continuation of that, where it's not just about moving money, right? Because stablecoins are a way of doing that. It's about being able to move anything, right? So being able to have ownership of this actual thing, right? So maybe taking a house or collectibles or financial or whatever it might be, and then be able to move this around very simply and easily on chain. So that's the overall idea behind RWAs. Now, why are people excited about it, right? I think it's a couple different things. Number one, there's two angles of it, right? There's why are like regular people excited about it, and then why are crypto people excited about it, right? And I would say, look, the why are crypto people excited about it, to start there, is, crypto is a $2 to $3 trillion asset class today, right? Give or take, depending on the price of BTC and price of ETH, right? And we've been trying to figure out how to grow more and bring more things into crypto, right? And there are, by definition, more things outside of crypto than in crypto today. So the idea is if you can take real things and bring them on chain, right, you grow the entire pie of crypto, and in theory, we all get rich, right? And that's kind of like why people are excited about it, right? And when they hear things like the ETF is coming and BlackRock is doing stuff on chain, there's sort of a big logical jump, like, oh, holy shit, it's happening. We're all going to get rich right now, right? Which is a big jump and is actually not true, right? Like, it's going to take time, it's going to mature, but that's like why there's a lot of excitement and buzz and froth around the RWA stuff. People are getting very ahead of themselves. They see big logos, big names, big numbers, right? And they think that, oh, it's really going to take off, right? That's the overall story. On the other side, the reason why it's interesting to folks like Biddle, right, to BlackRock or to Wisdom Tree or to Franklin Templeton or all these folks, is the idea to do really two things. One is to simplify the back office, right? I would say that's probably the least interesting part, but it's definitely a piece, right, where you can put this stuff on chain, which means moving things around is much simpler. It's cheaper to audit, it's cheaper to manage, right, and you can begin to save money on things like fund admin, right? Now, I tend to think that's the more boring answer, the less interesting one. The more interesting answer is by putting things on chain, you can do two things. One is you can access a much broader customer base, right? I always think the idea of making money versus saving money is obviously a more powerful one. And so tapping into new customers, tapping into a broader global set of people to distribute products to is the first thing. And then number two is then being able to mix and match multiple different types of asset classes and make things much more seamless that way, right? So new people, new products, right? That's ultimately what the institutions are getting excited about there, right? Or at the same time, saving money, actually operating those things. So that's kind of the overall idea and the overall story, right? If you take the RWA story today, you look at each individual subsector of RWAs, derivatives, $1 trillion asset class, right? Multiple, $1,000 billion asset class, right? You look at things like equities, it's 50, 60 billion trillion. You look at real estate, $300 trillion asset class, right? Each one of the subsectors of RWAs is several orders of magnitude larger than RWAs today. So the idea is very simple. We can take that stuff, put it on chain. It'll be good from an efficiency standpoint, a global access, a reach standpoint, and also it'll be good for crypto because it'll dramatically grow the size of crypto pie. That makes sense?
Interesting. I mean, you said a couple of really interesting things. One was there's the cost part and then there's the revenue part, right? And I've been around this space for a long time, and I remember 2015 people saying, if we're able to settle all transactions in the stock market on chain, it would reduce the expense, the back office expense by like $20 or $30 billion or something. And right. That was this is a reminder too that this RWA thesis, in a way, is a repositioning of something that people were talking about before, which is the thing called a security token, right? Like the idea that you could have a financial asset settling on chain would reduce the complexity and the back office expense. And I think that is interesting, but like it's not as interesting as the other side of it, which is, well, this is a new technology. It should allow you to do something that was previously impossible, right? Like settling a stock, like a transaction between two people in the stock market or between two people, or entities in the commodity market is interesting, but we already have a way of doing that. So doing it a bit more efficiently where more people can participate is certainly helpful, but it's not going to like revolutionize finance. What's going to revolutionize it, I think, would be the idea that you can do things that previously were not possible, right? You can
100%.
Open new markets or enable new assets and use cases and stuff like that just weren't possible under the constraints of the previous system. So, like, are there any sort of examples? Like, what are the things that excite you the most? This thesis, is it the idea of because and the other thing too that I've said before is like it's unlikely that we're going to be clearing and settling transactions in like shares of Apple or ExxonMobil anytime soon on chain.
Correct.
But there's going to be all these new assets and new entities and stuff where they're going to be crypto native from the get go, right?
That's exactly right.
So like, what are some of the things that you're like most pumped about?
Totally, and I think for what's worth, it's it's the right point, and it's always surprising to hear other people articulate because it's not as talked about. But you're totally right in the sense that you need, in order for this market to grow, you need net new things. That's the important distinction, right? The last cycle and the last time we tried this was very fixated on this operational efficiency, this back office cost saving element, which makes sense. I understand why people think that, but again, nobody gets out of bed to like save a couple bips off on admin, right? It's just not the thing that like really drives the needle, right?
Yeah.
Moves the needle, excuse me, and like drives change. So like you said, it is these net new things. Now, what are those net new things? It can be a bunch of different things. And really, I would say this, there's a lot to come here. And so this is a slice of it, but there are things that, we build an open and permissionless ecosystem with over 180 projects building on Plume, which means there's a bunch of things happening that I don't even know about that are going to cook up new things. So we'll get to those. But like, as a simple example, right, being able to, it's easy already for many folks in America, right, to already access many of these products, right? I can go to Fidelity and buy things. I can do things this way, right? But, if you follow the path of the stablecoin, I think that's probably the easiest place to start, right? Like you said, the stablecoin today is the original RWA that people often forget is a real-world asset, right? And if you follow the path of the stablecoin, the path of the stablecoin was very simple. It was one, solving crypto-native problems, right, by becoming it's just a way to hold value in crypto in a more stable way outside of the fluctuations of BTC and ETH. Then number two, it became a way for people outside the US to hold the US dollar. Right. And then number three, it became a way for people outside and institutions to be able to do things like remittance and moving money around and all that. Right. And so if you look at that as an example, the things that can be done is, allowing people in third world countries or wherever, right, whether you're in Latin America or Eastern Europe or Africa or India or any of these types of places, get access to US denominated assets, right? So maybe it's real estate here, maybe it's things like some sort of like income producing asset, maybe it's for us we do a lot of things with like solar farms or oil fields or short term receivables or whatever it might be, right? And it allows you to just really change the access. So that's like a net new thing that's happening, right? That allows more access and broader scope and broader reach of these things, right? It's good for liquidity for these assets. It's good for those people because they want to hold these things. And that's kind of like the first thing. Number two, I think you begin to like mix and match these baskets in new different ways, right? Today, if I wanted to have like a basket, or if I wanted to like get exposure to ABC, like let's say it's actually, maybe it's green energy or maybe it's AI or whatever, right? There's no good ways to do this today, right? Like the best way for you to get exposure to AI is probably buy NVIDIA stock. Right. And the problem with that today is like it's a very messy way of getting exposure to AI, not because it's bad, but because NVIDIA is like it's a basket of many things. You've got like a really, you got to think about earnings. You have to think about sort of like public sentiment. It's quite high right now. All these things kind of factor into, is it a good time to buy or sell NVIDIA, right? Whereas the thing you're really trying to get a sense of, I just want exposure to AI, right? So because of this, right, how could you get access today? Through Plume, right? And through some of the RWA stuff that's happening, you could buy GPUs directly. Right, and through just a single click of a button, buy straight into a solar farm, a GPU farm, right, and get exposure that way. So now I'm actually like betting directly on AI, and I'm making money off the stream this way. I could buy something that's more of a synthetic of those types of things, right, which is a collection of here's a bunch of GPU farms. Here's maybe I can maybe tokenize a model, right, and see how the model's performing, and you have sentiment analysis on over time, see how that's going. Maybe also I take a basket of NVIDIA stock and put it in as well, and create an index and a basket of these things together to maybe have a more more balanced approach and a more balanced way to get AI exposure for myself as well. And maybe the third is I'm super degenerate and I just want to like, look, I just think like this particular model is going to like really rip or something like that. Maybe I can come here and on a perps text, I can take out 100x level long on this particular model, right? I'd really expect that and go into. So these are like ideas of like, multiple sort of angles into the same type of idea, right? In which you can do things on chain you could not do before. And the whole idea is to make it very easy for people to express their ideas and get exposure to things in a very simple, clean way on chain through a few clicks of a button, right? Without having to do anything complicated. Most of the world today are messy proxies, right? That's what this stuff is. NVIDIA is a messy proxy for AI. It's not a bad one, but it is a messy proxy for AI, right? If you look at most, right. If like Google would just be like a messy proxy for the internet, right? Same thing with Facebook. Like, so these things are like not horrible. And like, if you look on chain today, there's a coin called WorldCoin, right? WorldCoin today, right, is the Sam Altman backed project, right? That allows, it scans a picture of it scans your eyeball and you get tokens, right? The token trades almost exactly, not to any performance or anything fundamental. It trades exactly to Sam Altman news. Right? Like when Sam Altman gets fired from OpenAI, the token dumps, right? When Sam Altman gets rehired, it pumps again, right? When Sora V2 comes out, it pumps yet again, right? So it maps perfectly to that, right? And it's because people are looking for ways to express their ideas about the world, right? Into different areas, right? And for us at Plume, it's being able to allow people to do that, and real world assets in general is allow people to do that, but through much more efficient means and through through a whole variety of things that you couldn't have done before, using the AI basket example. Buy GPUs directly, buy a basket of different things that represent AI and GPUs, right? Or maybe then just speculate exactly on like individual things and go really hard there. So that's just a couple dimensions of how it could be done, right? And of course, there's many more to come. But does that make sense?
Yeah, that makes a lot of sense. It's actually really interesting because I feel like for the longest time when people think about RWAs, they're always thinking about just, even to me, who's been in crypto for so long, whenever I think RWAs, I just think, tokenized treasuries.
Yeah, T-bills.
Tokenized stocks.
Yep.
Yeah, there's actually some pretty cool projects on tokenizing treasuries that just came out. But
Yep.
this idea of tokenizing like actual, effectively real world assets, like you said,
Yes.
and allowing trading on them, which historically was essentially not possible. It kind of reminds me a lot of one of the things I thought the NFT boom was going to lead to, which was essentially tokenizing like real world collectibles.
Yes.
Like for example, there's a huge boom in watches. There's a huge boom in sports cards.
Yep.
And the problem with those though is they have incredibly high transaction costs when you're selling them on eBay. It's like 10-15%.
Totally.
And so the idea of like having one central repository or something that custodies them and then you can just trade them for 10 basis points or whatever makes a lot of sense. I guess the key question though is where the thing with RWAs, which is different than something like so for example, Pump.fun just launched tokenized videos, which is pretty funny. You can create a token around a specific video. Obviously, with RWA, someone has to actually custody the asset. So, how does that sort of?
That's a great point. It's a great point, and I think you touched on something really important because a lot of people think RWAs is tokenization. It's not, right? Tokenization is a subset of RWAs. RWAs, in our opinion, in our worldview at Plume, is RWAs are a way to access the real world on-chain. That's what we're talking about here. And that can be done in multiple different ways. One is actually taking a physical thing, like a sports card or a car or a watch or a house or whatever it might be. You put it into a vault, right? Probably some custodian. So whether it's like Brinks for physical assets, or maybe use Fireblocks for BitGo or a custodian for digital assets, right? When you put this thing and you lock into a vault and you allow it to transact into a network, right? Very similar to how you trade equities today, right? Robinhood doesn't actually own the stock certificate. Some other company does, right? And they just sort of lock it up in there. You mint a representation on the other side and you let users buy and trade this thing. And it just updates the database, right? To say who owns this thing and individual thing. But the asset doesn't actually fly around the world, right? When you used to buy equities, they would like mail you stock certificates, right? You don't have to do anymore because it's locked. It's the same idea, right? So that's the first piece. Through Plume and through a lot of these types of things, you can use things like Brinks. We have a partnership. We have Brinks with all the good custodians where you can then, again, go and put your asset in there and allow it to be traded in the market, right? And I can talk a little bit more about the dynamics on why it didn't work as well last time, why it's changing now, but there's that. Number two, right? The other way, though, that we also think is really interesting is, I think, less talked about are these ideas of synthetics, right? Which is, and to me, that's where a lot of the innovation is going to come from, right? Tokenizing real things and physical things is hard, it's heavy, it's slow, it's painful, right? But when it gets here, it's very good. It's like a foundational piece. It's on-chain now. You can really use it. There's some weight behind it. It works, which is great, right? At the same time, you can complement that with synthetics, which is just printing the price feed on-chain, right, of different things. So I'll give you a very simple example. One of our protocols, you can take out a 50x lev long on Pokemon cards, right, today, right? And you don't have, today, you don't have to tokenize every card in the world to do that. Right? You can just bring on a feed, right, of all kinds of different things, right, in order to build a market around it and build a price. Now, it's tricky because depending on the type of asset, maybe there's not enough data, it's too easy to manipulate, or you have to create synthetic. So there's a bunch of different aspects that make that tricky, but you can also do it in different ways. And so this way, you can build much more interesting indexes, right, and indices and composites of things, right, from multiple feeds together, right? And so you can take that same concept and begin to stretch even further. So you could take a digital representation of cards through price, right? Then you can expand it to one of our other protocols where you can do GPUs, right? You could do spot GPU pricing and basically build a futures market around that, right? If you want to do it, right? So it's actually crazy that an orange farmer somewhere, right? And this tells you how much I know about farming, but I'm assuming that's going to an orange farmer somewhere that like cultivates crops all day, and they have better financial tools to manage their business, right? Than OpenAI, who spends $100 billion a year, right, on GPUs, right? They just spot market buy these things. They don't have any way to hedge or control their spend or anything like that, right? So it doesn't make any sense. So by building new tools, that's another way to do it, right? Another way to do it even further, you can even take sort of like net new things. And going back to that point, right? You could take a synthetic that is a combination of 15 or 20 different things. For example, we have one protocol today that lets you speculate on culture, right? And sort of like, and what does that mean, right? If you were to bet on like the US as a simple example, right? In a simple Perspex chart, right? You want to trade up or down. What does that mean? It's a collection of like 80 different data points that are all pulled from the real world. You take things like CPI data, crime data, inflation, I guess it's CPI, right? You take GDP, you take population growth, you take sentiment, you take all these things out there, you bundle together into an index, right? And then you've got a chart to trade. Right, and it allows you to make a very simple thing. I can level long America, I can short Korea, right? And then you can take that idea even further. We have one that lets you do things on foods, right? I can like level long the burrito, I can like short I can short like Chinese food or whatever, right? And all this is to be able to take a collection of things around the world and put them and mix them up in different ways on chain, right? And those are like more, I think, like those are like more, those are like lighter examples, right? You could do this for all kinds of financial instruments, you could do this for everything else, right? But that's the sense of where we're going and how this stuff works today. Right. And why I think like it's not just tokenizing, right? But I think you also have synthetics and they lean into each other, right? You have both of these things that really drive people. This way you can access things in major ones. If you want to like get access to cards, Pokemon cards, you can buy a card directly. You can buy a basket of cards. You can invest into maybe a bunch of different card shops, right, through Plume, right, or have access, or you just speculate on the cards themselves and the price action around it, right? So that's what you want to do. Have really, really many different facets of the same thing to allow any person to get the exposure they want to all these types of different things.
Yeah, that makes a lot of sense. I think, and I think like one of your other points too, just about not to go like too far back, but just also on access.
Yep.
Like people don't realize how, essentially most of the world is actually shut out of the U.S. stock market,
yep.
for example. And like for us as Canadians, like it's incredibly difficult to buy, stocks in Singapore or stocks in Hong Kong. Like you can kind of use the ADRs or whatever, but they
exactly.
It's still like very limited and high,
yep.
very high transaction cost. But it's really what you're sort of proposing is really interesting because it goes beyond that. It's actually new ways to even trade the new ways to slice up the exposures of these different assets.
That's right.
Not even just bringing new sort of markets online. It's even more. It's like we're not just trying to save you cost. We're trying to give you new alpha trading opportunities. Whatever you want to call
exactly.
it.
I think it's exactly, and I think that's the important part of it because ultimately, look. Again, I think economics drive behavior. Economics make that's how things actually change and move. And if you look down that road again, saving a little bit of money on transaction fees is cool, right? But what really changes things are new markets, new types of things, new ways to do it. And I think also increasing the sort of surface area for people to create is also a big deal, right? Today in the classic RWA world, you have to own a card store. Or you have to own a huge, sort of set of properties, and tokenize isn't very much. And that's the only way you can be like a real world asset developer, in some words, right? You have to own the underlying asset on chain. By sort of abstracting that away and allowing people to play at the synthetics level, I can just understand a market and say, I'm going to pull 15 different feeds together and use our tooling, right? To pull this together, I'll create a different weighting across this. I'll publish this out there, right? Or I'll make a basket, right? I'll say, hey, look, I want a little bit of like solar. I want a little bit of this, I want a little bit of this. I'll create a basket and create my own like little ETF, publish it out there. And if people trade it, I make money on this myself, right? So you sort of create the surface, like you really expand the surface area and types of things people can do. Maybe you want to do a little bit of physical plus some synthetics and put that into a basket, whatever you want to do, right? The idea is there are a million different ways people want to cut and get exposure to different things. And we're very limited in our ability to do that today, right? So by providing the tooling to make that easier, right, we should be able to increase the number of products we'll get to do. But also on the other end is then for the people who want to get access, it's just a much easier path. I should be able to go from idea to, I should be able to like thought to execution instantly. And today that's not easy, right? And that's what we're trying to do.
So
it's interesting. It's like, sorry, Andrew, go ahead. And then I've got something.
Oh, no, sorry. Yeah, just one last point, I guess. Don't need too long on it. But I guess the key question, obviously, with like user-generated assets is liquidity. Like, it's cool to let anyone create their own assets and all that type of thing, but for the most part, probably going to be very thin liquidity. So I guess how do you bootstrap the liquidity for these sort of new asset classes?
So I think that's exactly the right idea, the right question, by the way. Liquidity is the driver in crypto. Without liquidity, right? And if you look at RWAs to date, a lot of it has been led on liquidity, which is why it hasn't worked as well, right? So I think if you go back to that and the liquidity point, the last cycle there were products like things like 4K as an example, right? They're great friends of ours and they're good partners. But like as a simple example, you were able to take an individual asset and send it to them. They would custody the thing and then allow you to trade it, and they'd fractionalize it, right? This is how you can like buy a fraction with the tech or buy a fraction of AP or whatever you want through this thing, right? And own a piece. The problem with that model is very simple: is you lack supply, which then ultimately makes a lack of demand, right? You just don't ultimately have any real assets to sell to people, right? So for us in this way, I think, as a simple example, we have take cards, right? Like if you were to do a very simple test, if you were to have a model where say, everybody send me your cards, I'll tokenize them and then like put them into a vault and let people trade them, right? You're just not going to make cards, right? Because the idea that people are going to like send them to you, package them up, drop it off, trust you, it's a whole thing, right? Versus our approach today is to go more B2B, which is let's start with card holders, right? And card owners and card shops, right? As a simple example, right? And go to them and say, hey, look, we will give you the tooling to take your existing business on chain, right? So instead of you sending things out and waiting for this card, 6 weeks to ship this card out and have it turn, just have it sit in your store and have this thing turn 100,000 times while sitting on the shelf, right? And you already have supply, you've got demand baked in, you have liquidity already coming in, creating this ecosystem, and I'll just help you get these things on chain, right? So it's a simple idea around this this like initial piece, right? Secondarily, on the liquidity side, really, I think you just target different pools of assets and target different pools of capital, and you look for what do they need. So, for example, we have partnerships with folks like Anchorage, right? So big custodians that have tons and tons of capital sitting there doing nothing, right? What are they looking for? They want yield, right? You should be able to earn some yield while the assets are doing nothing. And so we provide yield-bearing products that are simple, straightforward, right? And allow them to earn yield. So that's an asset that brings in capital, right? And then from there, what do you do with that? Now you can take that around, and we call it RWA Fi, right? But now you can take that asset, bring it around in crypto, and maybe go into a lending market, right? Take out a loan against it, do some looping, right? Put it into a perp stack as collateral, and then speculate on and do things that way. This way, you can begin to sort of have a couple different ways of like aggregating capital and aggregating demand into this thing to then be able to use in the ecosystem in its entirety. Does that make sense?
Yep. Yeah.
So there's two things that I wanted to talk about. Andrew already mentioned one, which is liquidity. The other one is verifying the authenticity of the asset that the RWA is based off of, right? So, you're doing this, you're creating digital versions of real world assets with the same seamlessness as someone can launch a token on pump.fun. There were 200,000 meme coins launched last month. And so like, this is let 1,000 flowers bloom, but for real stuff, for like things that are useful, productive assets or things that people, want to own and can hold value over the long term. It's an amazing thing to consider, to think about, like how much that could transform finance. But on the other hand, if there's so much going on here, and there's all these different user-generated assets and different kinds of issuers, like how does one validate the claim that the token has on a basket of actual real-world assets, for example? Totally. And is there almost like a demand or a real need? So obviously some of it is on-chain, like, you in the sense that you can show like proof of reserves or whatever on chain, but like we're talking about off chain assets, right? So like you say, there's a vault, or there's, claims on a company's, cash flow, or there's, token trading cards, or there's real estate, or there's antique vehicles, whatever it is. Like you got to figure out a way to like show a chain of custody on that, on those physical goods. How do you do that? And is there almost a need for like an RWA Standard & Poor's or like rating agency that can like basically provide a rating of content or a rating of assets, or is it more like a Yelp review almost, where it's like you got issuers with like a good track record, and so like in the aggregate they have a high peer rating and that's enough? Or like, I don't know, how do you think about
I think it's both for what it's worth, right? I think so in my opinion, the way you think, I think these are the right questions for what it's worth, right? Because look, you're ultimately building an ecosystem, and an ecosystem is based on trust, right, in the beginning, and trust is not enough. So you need to have other guardrails to make this thing understandable to use, and over the long course of time, then you can lean into trust. But in the beginning, you need to bootstrap that through other ways, right? And so when you think about the ecosystem that we're building at Plume, we do all of the above, right? Which is like, I think when you want to build something new, you lean into what are the sort of like advantages of that new paradigm, right? And that's how you build something that new, right? So we can like literally take S&P and Moody's and put it on chain. Great. But what else would you do to make this work, right? How would you use it in a more on-chain and a more native way? So I'll give you a very simple example, right? So On the custodian side of things, like you want to make sure that the thing is there, right? That's the first piece, right? Again, we are an open permissionless chain at Plume, so we allow people. We want to give people the tools to build whatever they want, right? And the community will help us decide what is required and what's necessary, and the things that are needed, right? These services like ratings and credit agencies around it will emerge as it comes up. But I'll tell you where it has already begun to spring up, right? One is on the custodian side of things, very simple things. Like, for example, again, take solar farms, right? We work with a lot with solar farms because solar farms, the great thing about a solar farm is it sits there and it turns sunlight into dollars, right? And that's a great yield bearing asset that is out that you can bring on chain, a lot of people earn against it, right? But when you think about a solar farm today, right? At one level, it's structural, and the second is more monitoring. So at a structural level, what you're doing is taking an asset, putting it into an SPV, right? That's bankruptcy remote, it's protected, right? It's hidden away from everything else, and you allow that to be mirrored on chain, right? So this way, you have at least a sort of financial structure and a legal structure that is clean and clear that makes it easy to interact with. That's number one. Number two, then, right? Just like anything else in the world, right? I mean, we've seen this with banks, even, right? Where it turns out your money's not always safe with them either, right? And so there's a limit to what can be done in general, right? And so there's some rules and guardrails you can put in place, but there's only so much you can do. So, but again, take the solar example, right? If I were to buy a share of the solar asset today, I'd begin earning yield, right? Because I'm a holder of this solar asset, which is great, right? Now, what can I do here that's better? Now, normally if I were to, I would just like get deposit in the bank account. Once a quarter, I get statements, or whatever it might be. And that's it. Outside of that, there's not much more I can do, right? I know that like I'm like protected in theory because of legal structure. So we can mirror that legal structure, make sure that when you buy the asset and hold the token, you own it, you're going to earn a yield on this, right? The other thing you can do though is because it's internet native and it's digitally native, right? I can integrate directly in with the solar farm itself. Right, it's an IoT device, right? And I can, from a real-time basis, stream the information over. So I can see how much electricity is coming into the solar panel, stream it directly to the user, and put it on chain, so you know this is actually what's coming, and then you can track the payments against that. And then in a vault somewhere, I've also tokenized the sort of a contract, so you know exactly what I should be getting paid for this, and does the math for you, right? So you have all this stuff that's continually streamed on, so you know exactly how much is coming in, how much you should be getting paid, and then have that map exactly the contract. That's all on chain in perpetuity. So now I can not only that's day one, but over time that creates a really nice thread. So you can really get a clean P&L and get a good view on how this works over time, right? So that's a simple example of like how you can take the existing world, right, which is already there. We still map the same structure, but you add other things to it that you couldn't do in an off-chain environment, right? They get better, right? That's one. Number two is simple things also. Like we work with a great firm today called Cicada Partners, right? That also is a great credit folks who come in here, and for each one of these assets, they do a very deep, thorough diligence and review on these assets to make sure that the structure is correct. You know, the team is good. There's a good history. They've looked at the financial statements, all these kinds of things, and they give it a rating, similar to like a Moody's or an S&P style thing, right? Or now you can give each one of the assets rating. So it's a similar thing, right? You can do both, where there's a more top-down rating, but also bottoms up at an individual level. People can also opine, and the dollars and how the money flows will also be a big part of the story on its own, right? So you can track and see these things, and so just by putting all this stuff on chain, so you have both the bottom, the sort of top-down view, the structure, and also the bottoms-up stuff that comes in. That makes it very easy to sort of give credibility to these assets. And again, it's all time in the ground. The longer it's here, the better it becomes, because the more on-chain history you have, the more tracking and history you have behind these assets. So it becomes very powerful after a certain point in time. In the beginning, guardrails to make sure it's aware, people know what they're getting into, and you can choose super risky assets if you want, right? It's not up to us to decide. I just want them to know that that's what it is, and they can choose to allocate. It's not like crypto is like not a risk-free place by any means in general, right? And so you have a lot of risk taking. So I just want people to see the guardrails and know what the signs are, and then they can allocate and choose to decide, and the money will flow to where it needs to flow.
Yeah, I mean the issue, or sorry, it's a great explanation, by the way. Then the question that I think a lot of people have when they look at this is, look, I'm willing to accept that there's risk to investing in a solar farm or buying, a trading card or some other asset that could go up and down. But what I'm not prepared to accept for mainstream investors is like the failure of the underlying technology, right? Like the contract risk versus the counterparty risk. And that's something that when you're in the regular financial world, like even during the global financial crisis, like if you were a depositor with a bank, or, you had some bespoke derivatives contract where you had a counterparty that had gone under, then, you were at risk. But, even then, like people weren't doubting whether or not the share certificate held at at BNY Mellon for my share of, GE stock was somehow going to collapse. Like everyone still trusted in that, maybe rightly or wrongly, right? But like there was an understanding of the system, boring as and inefficient as it may be, was quite durable and like quite sturdy, right? And so I guess the question now is, there's both the issue of, well, where's the collateral held and how do I prove that it's, valid and so forth? And then there's like proving the technology itself. And I just 100%. Wanted to use that as a sort of a jumping off point to talk a bit more about Plume itself, like the technology, like what it is that you're building. This is, you said the chain, like, is there a token? To just help walk us through that in a little bit more detail.
Totally. Look, we've touched a bunch of great stuff, so this will actually fold really nicely into that. Look, at Plume, we're building the first real ecosystem and network and a chain focused on bringing the real world on chain or real world assets, right? And so at the underlying level, we have a chain itself. It's an EVM chain, which means it's compatible with Ethereum, right? And it allows people to easily deploy their smart contracts onto Plume. We combine technology, ecosystem, users, and liquidity into a single thread to really bootstrap and bring this stuff on chain, right? That's the idea here. So what we were trying to do is, maybe to give you some quick highlights, we build an EVM compatible chain today, right? Number two is we have an ecosystem of over 180 projects, right? So it's different types of assets, different types of services that are building on Plume. We've got a huge following on social, so things like 500,000 followers on Twitter, 350,000 people on our Discord. But more than that, how does that translate to on-chain usage, right? In our testnet, which we had out for about 2 months, that we ended about a month ago, we had over 18 million unique wallets, a little bit under 4 million unique wallets active on a regular basis, and then about 280 million transactions in just 2 months, in 8 weeks, right? So just to show you the kind of depth there. And then, of course, from a liquidity standpoint, we have several $100 million committed to the chain as well, right? So the idea is, by combining all these things together, right, we build this ecosystem that allows us to really bootstrap this thing. Just like you said, Alex, like, this stuff it takes time, right? This is not going to happen overnight, right? This is one of those markets where the days are long, but the years are short. It's going to take some time, but the minute we get there, it's going to come very quickly, right? And so, just like you said, we are building the technology to facilitate this, right? And at the end of the day, we need time in the ground to allow people to experience and to understand how this ecosystem works together, and to build net new things that you couldn't be done elsewhere. And that's the only way that we can really make the RWA story begin to sing and become an accessible thing and a regular thing for everyday people, right? And so the technology is very simple. We make it easy for anyone to bring things on chain through a combination of products. We have something called Plume Arc, which is our tokenization. And so if I wanted to take a physical card or a title to my house or financial instruments, right, and bring them on chain in some fashion, you can engage a Plume Arc and it will take you through the whole process, from setting up the legal structure, from actually tokenizing, custodians, all of the whole thing, right, and taking down this whole thing. So by the end of the process, you now have tokens somewhere that are spit out and are ready to be interacted with on chain, right? We not only take it through the process, we help mold and guide it to make sure that it's very usable on chain as well, right? Because the whole point of bringing things on chain is, sure, you have composability, but it's really about composability. Right? It's about making sure that it's useful across all of crypto, right? And that's a big part of the story. Number two is we have this product called Plume Nexus that makes it easy to bring all the data on chain as well, right? And so this is a collection of oracles in addition to our own oracle that we use to bring a bunch of information about the real world on chain so that the end user can now sample anything in the real world, right? And all of that gets funneled into our ecosystem at the chain. Right. So now the chain is sitting here producing blocks, and we are now, with these 180 projects, you can bridge over just like any ecosystem, right? And now you can move things around to do different things. You can say allocate it, you can swap and buy this asset, right? You can then take that asset and take it into a lending market, use as collateral, right, and take out some money, and then go loop or do something else or buy whatever else you want, or then perhaps you could then go and go put this into a perp stacks, right, and then use it as collateral to begin speculating with. So that's the idea. That's like the underlying technology. It's both the onboarding part, but then also the execution part.
Yeah, that's fascinating stuff. So what does the next year look like for you? Like, where do you think the growth comes from? Do you think it comes from existing companies, financial institutions, like focus on TradFi? Are we talking BlackRock? Are we talking Franklin Templeton, some of these big firms that are crypto native? Or is it more small, well, when I say crypto native, sorry, I mean TradFi firms that have shown an actual legitimate sustained interest in crypto? Or is it coming from crypto native organizations? Like, where do you see the growth happening?
I think it's going to change over time, right? Now, where in the next year, where does it come from? Look, I think the on-chain world today, right, and we all know this, is 99% degens and 1% trad, right? And I think it's actually been pretty generous to the trad folks, right? It's probably 0.1% trad, right? And so, that's the market today. And so any business in RWAs that's targeting that 0.1%, is going to have a hard time, right? Because definitionally speaking, there is nobody there. It's just it's a small market. Crypto in general is a small market. Then you're going to cut it even more, right? So I think if you look today, right, in my opinion, again, going back to the simple statement, I think economics drive behavior. So what is going to get the TradFi folks to really come in? It's easy to read headlines about BlackRock and Fidelity and Franklin. And look, we know all of them, and we're close with them. We work with them a lot. I think they're very sharp, and I'm actually very excited about what they're doing. But it's a big thing, right? Getting BlackRock, a $10 trillion asset manager, right, which in one entity itself is 5 times the size of all crypto, right? Getting them to move and put a bunch of stuff in crypto is going to take time. So it's not going to happen tomorrow. I don't think it's going to happen next year. It's beginning, but it's going to take time. And the only thing that's going to speed that process up, right, is showing them volume and showing them usage, showing them how the money flows. And so we focus on crypto natives today, right, to make it easy and to show people how this can be used, how you can turn the same dollar many times, to show volume, to show an ecosystem, to show users. And then you pair that with institutions over time. So I think it's going to be 80-20, right, crypto native to trad today. Over the course of a year or two, we begin to shift, and that the on-chain audience will change. And as the on-chain audience changes, the products and the use case will change as well. But today, that's where it is. And I think, in the future, we will flip then to 80-20 the other way, right? But we're currently in the crypto native phase. And I think if you're not building for crypto natives today, then you're serving a non-existent market.
Got it. I mean, even to go 80-20 is over-indexing massively to TradFi.
Yeah, I agree.
9-1 breakdown. Well, listen, it's exciting stuff. Yin, this has been a great synopsis of the RWA thesis. I actually think that a lot of people, to the extent that they do think about this, do think of it as tokenization. So, you've got an asset in the real world, and you give it a token wrapper of sorts, and that allows it to trade in real time globally, peer-to-peer, which in and of itself is an interesting, important innovation. We've seen the stable coins. But the idea that Onchain can mean more than that, and that it's sort of an infinitely customizable sort of template for assets, I think is something that I don't think is as well understood. So I really appreciate your walking us through that in more detail. Where can people find out more about what you're up to? And we got a lot of listeners on the show that are working at banks and financial institutions. Maybe they're interested in tokenization and also other on-chain RWA options. Yeah,
we're
tell us
also
more about it.
We're everywhere today, so you can always go to our website plumenetwork.xyz and find us anytime. I would say we're most active on Twitter, so Plume Network, just on Twitter, one word. You'll find us, and we're doing a lot of stuff out there. We're always doing community calls, AMAs, spaces. We're on Discord a lot. If you want to join our community, pop into our Discord as well. There's another 350,000 people in there waiting with you, and you can kind of talk and hang out with the community. We do all kinds of stuff there as well. So that's the best place to find us, right? And if you want to do anything related to real-world assets, right? Again, the way we've built the ecosystem is very simple. We want to help people bring things on chain, but not only bring them on chain, but once it gets there, make it useful on chain, right? And the way that happens is by building this community. So by having the community of projects, right, that we have, our user base, as well as the liquidity that's been committed, right? There's no place better to kind of bring your assets on chain than Plume today. So I'd say anyone who's interested, we're always happy to talk. I think the beautiful thing about RWAs is it's not a zero-sum game, right? There's, again, way more things outside of crypto than in crypto today. And so we're happy to have anybody and have anyone come in and work with them to get their assets on chain and begin us marching down this path.
Awesome. Well, that's really exciting stuff. Thanks again for your time. We appreciate it. That's it for this week's episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Make sure to leave a rating or a comment on the show wherever you get your podcasts. Helps other people find it. Until next week, that's it. Take care.
Thanks for having me.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.